This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pashkurdis. Thanks for joining us at XM.com. Government bond yields took an unexpected dive on Tuesday as a combination of strong auction demand, safe haven flows, and easing inflation worries boosted the bond market. The yield on 10-year U.S. Treasuries slumped to a one-month low. In the U.S., key parts of the Treasury curve were the flattest since March today. The U.S. yield curve steepened substantially once all the pandemic stimulus started flooding in, and this is the first major retreat in this part of the curve since last summer. As more and more data has come rolling in, markets have slowly been aligning their views with the Fed's, which is that there is no reason at this point to think the current surge in inflation won't be temporary. That notion will be put to the test tomorrow when the latest CPI numbers are due in America. But for now, investors are more relaxed about the prospect that the major central banks won't be in a hurry to withdraw all the stimulus. The decline in Treasury yields have been a boon for many of Wall Street's popular tech and growth stocks. The Nasdaq Composite outperformed again on Tuesday, closing 0.3% higher, while the S&P 500 ended the day flat. Nasdaq futures are also leading the U.S. market today. However, stocks elsewhere around the world were mostly in the red on Wednesday, and markets have generally been suffering from a lack of direction all week. The U.S. dollar has been drifting aimlessly in the past couple of days, barely flickering from yesterday's record jump in U.S. job openings in April. The euro has also been stuck in a tight range this week. The ECB is expected to stick to its dovish script when it announces its latest policy decision on Thursday. In contrast, the Bank of England appears to be sounding more confident that the British economy will recover strongly, and Chief Economist Andy Haldane hinted at turning off the tap for monetary policy support earlier today. The pound edged up after his remarks, making it the best performer in the European session. The Canadian dollar wasn't far behind, however, as investors anticipate the Bank of Canada also sounding upbeat about the Canadian economy when it announces its policy decision at 1400 GMT. This is today's Daily Market Comment. Thanks for joining us at XM.com.